Hey guys, Brian Horton with BK Trading Academy. Welcome back. So I decided to start back from the beginning. What is a candlestick? And so we're going to talk about the anatomy of a candlestick, how it's formed. And the reason why I'm doing that is because there's a lot of new traders who are looking to understand these basics. We've been trading for quite a while and we have a lot of information back in the past. So I decided to take it back to the basics again. Sometimes going back to the basics is necessary because it helps us to understand charting and analysis, what's going on, what's going to happen, just fundamentals and technical analysis and price action. So let's go ahead and deep dive into what is a candlestick, how it's formed, and just the overall basics anatomy of a candlestick. Let's get right into it. All right, guys, so I have some visual aid for you guys, and I promise it's going to get a lot better, but I want you guys just to take a look at this here, just so you can understand the definition of a candlestick and what it represents. So first off, a candlestick is a visual representation of price movement within a specific amount of time. Secondly, the body represents open and close. So if you look at this candle here, this is the body here, the very thick part of the candle. And then the wicks illustrate the highest and lowest points prices reach within a specific amount of time. So this is a wick. So if you can think of a normal candle that you would buy in the store and you would light it up, this is the wick here, except we have wicks at the top and even at the bottom. So the body is the meat of the candle and the wick is the small thin line sticking at the top or at the bottom of the candle. Now, the color of the candle represents if price opened higher or lower than the previous candle. And we're going to look into that, look at a live chart, and then just some other illustrations as well. Okay, OHLC stands for open, high, low, and close. So the open means the open price is where the candle first began. All right, so let's look at this green candle here. This is the open price where it first formed. And then the highest price where it formed within the time frame, specific time frame. The L stands for the lowest price it's been, which is down here. And then close price is the final price in which a candle had completed right here, right before it transferred and transitioned to another candle. So now let's go ahead and get into the meat of things so we can visually understand what's going on with the candlestick. So I marked open here because this is the open of the candle. On the right side is the price that you would normally see in any chart. You'll see the price here. So we're going to say that this is a stock chart of Apple, okay? And now we see a candle forming here. This is the open. And as the candle moves to the upside or move upward, it turns green. The reason why the candle is green is because it is higher than when it originally opened. Okay, now we can adjust these colors in our charts, but for the basics, typically candle charts are green and red, or candlesticks are green and red. All right, so as price move up, the candle is green. And on the right side represents the price of the specific Apple stock, which is representing currently at $115 per share. Now, as price moved downward, you will then see a wick form. And the reason why you will see this wick form is because it's letting us know the highest price has been within this 30-minute time frame. So we're in a 30-minute time frame, and depending on what time frame you are will depend on how long this candle will complete itself. Okay, so within this 30-minute time frame, price has moved up from the open. It started to pull back, moving to the downside. Downside meaning that it's headed downward. And now as price moved down, there's a wick forming. Now let's say as this candle moves down, it's approaching when it first opened, right? So the candle is still green. But as the candle begins to move downward past the open, it turns red. The reason why it's red is because it's lower than when it opened. So this is the anatomy of a candle, all while within the 30-minute time frame. And you will see price move up and down, up and down. And let's say it stopped here and then it starts to push to the upside. And as it starts to push to the upside, you will then see a wick forming here. All right. And let's say it stopped and it closed right here. So I'm going to go ahead and just type close right here. So this candle is telling us a story. It opened right here when this 30-minute time frame started originally. It shot all the way up here. This is the highest peak. This is the wick we talked about. Price came back down, came all the way down here to form the lowest wick here. And then it shot up and it closed within that 30-minute time frame right here. So just looking at a candle, you should be able to understand the history and the story of this particular candle. So remember the open here, the close here, and let's go back to refer here. We have the high and the low. So we have open, high, low, close. And as we look at this here, we have the open. We're going to type high. Then we have the low. And then we have the close. So if you just looked at this candle alone, you would know what happened. It's red because it's closed right here. It closed lower than when it opened. And then price shot as high as this here. Then it came down and pushed it to the downside as low as right here. And if I look here on the right, this is my price here. So remember, this is Apple. This is just a demonstration. So price is currently between $90 and $95 a share. This concept also applies with Forex as well. If you can trade and understand candles within Forex, you can do the same thing with stocks and futures and so on and so forth. Now let's go ahead and look at another example. So now that this 30-minute time frame is up and it completed this candle, another candle will start to form. And as it shoots to the downside, it turns red. The reason why it's red is because it's lower than when it originally opened. And one side piece I want you to know is that wherever a candle form at and open, it starts where the previous candle originally closed. So this is what I'm going to show you here. I'm going to actually type open right here, which is at the exact same price where the previous candle closed at. So it's like a transfer. If you can think of a relay race and you hand it off to your next runner, it's a straight line across here. And that's how you can also identify when the last candle closed and when the new candle opens. Okay. So price is shooting to the downside. It's red because it's actually lower than when it originally opened. And now let's say the candle decides to move to the upside here. And as it moves, it's forming a wick right here. And the reason why, again, is because it's telling us, the story is telling us that price went as low as this area here. And if we look right, it went as low as $85 per share. And then price continues to move to the upside. And as it passes the open, it turns green because it's higher than when it originally opened. And let's say price continues to move to the upside, and then it decides to fall back a little bit. So now that when the candle starts to fall back, it's forming a wick. And you may see price kind of do this up and down, up and down, up and down. So all this is saying is that this wick here shows us that price within this 30-minute time frame touched this area right here. And then this candle here at the bottom within this 30-minute time frame went as low as this wick here. So if I look at the price to the right, I can see exactly what happened within 30 minutes simply by looking at the color of this candle and looking at the wicks of the candle. And let's say price decides to move up even higher, all within this 30-minute time frame, and then it closes right here. So this will be the close here. And this here would be the low. And also at the same time, this is the high. So you may not see a wick at the top or at the bottom, for example, in this case here, because if it closes before it begins to drop forming that wick, then this will also be the high. All right, guys, so now let's go ahead and look at a live chart and look at it in real time so we can put everything that we've learned into practice. All right, guys, so I'm in the NASDAQ. I'm looking at Apple on the 1-minute chart. So every 1 minute is going to form a new candle here. So I like to have my seconds going right here. So you can see it counting down here on the right, currently at 47 seconds, 46, 45, 44, and it's going to do that. And we can see how the candle is moving. It pushed up. Now, in my case, I changed my color green candle to white. It's just something that I prefer. And then my red candle is still red. So as price moved down, it will turn red. As price move up, it will turn white. Now let's look at this here. We can see that the price is forming here is currently at $149 and some change. Time is about to end. And we can see this wick. This tells us the highest price is gone. And we can see prices moving down. And within 5 seconds, it's going to start another candle. And it started right where the previous candle ended. And we can see that it is currently white pushing to the upside. This wick here tells us this is as low as price has gone within this first 1 minute chart. And if price begins to push lower than when it opened, it will turn red. So let's kind of take a look at it and see what happens. So price is continuing to move. There's no wick at the top because it hasn't gone any higher than that. Now it shows a small wick and now it's continuing to push higher. It's pulling back, exposing a wick, showing how high it's been within this 1 minute time frame. And now price is dropping. And this is how the charts move all the time. Now it's red because it's lower than when it opened, exposing this long wick, telling us it's been this high since this candle is formed. And now it's about to change to another candle and it should do a nice trade-off right here. So right where it closed is right where the new candle opened. It's white showing us that price is above where it opened, exposing a wick now. Now it's lower than when it opened. And let's kind of get a little bit closer. And looking at the price on the right side is really important here. Like I said, I'm in the Apple share. It's currently trading at $149.56. And you can see here now it says $149.62 as it goes up. And so it's completely up to you when you want to put in your order or when you want to put in your trade. It's important to look at these candles because it tells us a story. It helps us to mark up charts appropriately. It helps us to understand what trend we're looking at, when we should actually wait before we enter a trade, and so on and so forth. This is my time frame here. So I'm on the 1 minute time frame. Now, if I want to look at a higher time frame, I can click the 5 minute time frame. So now every candle will form within 5 minutes. Sometimes you don't want to look at a 1 minute chart. You want to look at a 5 minute chart or a 15 minute chart or even a 30 minute chart, right? For different purposes. But this is the simple anatomy of a candlestick that oftentimes people gloss over and don't really learn appropriately when they first started trading. Sometimes it's good to go back to the basics to understand some of the easy things so that we can understand the greater things. So this is the basics of a candlestick. So we see that we have 3 red candles, meaning that prices went lower than when it originally opened at. So if I sold here, I would be making money if I sold right here, because you can actually make money as you sell. You can make money as you buy. All right, guys. So very simple video here. I want you guys to let me know what you think about this illustration. I tried to make it available to you as simple as possible, letting you know the basics of a candlestick and the anatomy of a candlestick and how it moves. Guys, if you have any questions, please let me know in the comment section. Show me some love by giving me a thumbs up. Hit the notification bell if you haven't already, and subscribe. We do videos like this all the time. We try to cater to those who are brand new traders, to those who are advanced. So guys, again, let me know what you guys think. If you are a struggling Forex trader, we have an academy for you guys where we talk about the basics of Forex, understanding Forex, the anatomy of candlesticks, just like this, all the way to advanced, where we help you to implement a strategy and make consistent profits. So I want you guys to check the link in the description for our academy if that's you. Also sign up to our Telegram. We have a Telegram for free in which we can actually encourage you, share trade ideas, and much more. Guys, we will see you in the next video. You have a blessed day.